Hey, Bobby Trades! I want to do a video analysis update of the stock market. We'll talk about the S&P, as well as the Nasdaq, the DAX, and Apple, AMD, Nvidia, and Qualcomm, Pfizer and AstraZeneca, Disney, Nike, FedEx, and United Airlines, Uranium Fuels and Petrobras, GDXJ and Palladium, Tesla, Enphase Energy and First Solar, Neo, Liato, and Datadog, Amazon, Shopify, PayPal, Bitcoin, Ethereum, Tron, and Ripple. So we'll start with SPY. It forms a wave 1 and a wave 2 that has a big wave 3. I believe it's ending wave 4 at the 50 to 61.8% fib. So wave 3 was the length of wave 1 placed at the wave 2 low. I expect wave 5 will be the length of wave 1 placed at the wave 4 low. And we'll see SPY hold above 380 and go on a wave 5 up to the 520s. And I think we could see when we look at some of these other indices that ends up being conservative in the big picture. The Nasdaq is one of them. I think this is a wave 1 and a wave 2. This is a big wave 3 and a wave 4 that ends at the 38.2 to 50% fib. So the length of wave 1 or the length of wave 3 placed at the wave 4 low gives the wave 5 target. So if wave 5 is the length of wave 1 placed at the wave 4 low, then wave 5 wouldn't break the wave 3 high. So wave 5 kind of needs to break the wave 3 high. If it's a wave 5, I think wave 5 will be the length of wave 3 placed at the wave 4 low, and that could take the Nasdaq QQQ ETF on what we'll call in the future a blow off top. If wave 5 is the length of wave 3 placed at the wave 4 low and it replicates this rally, then in the big picture that could take the Qs up into the 500s, even the 520s. Here is the DAX. It's a kind of similar idea where we have an ABC correction. And from the 2020 low, we form a wave 1 and a wave 2 at the 50% fib. So above the 78.6% fib is a little wide of 20.94. I think we're going to see the DAX enter wave 3. The length of wave 1 plays at the wave 2 low can take the DAX up to 43 for a minimum wave 3 target before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 placed at the wave 4 low, then all in all we can see the DAX go up to the 50s for waves 1, 2, 3, 4, and 5 in the long term. Here is Apple. It forms a wave 1 and a wave 2 from the September 2020 low, then has a big wave 3 that's subdivided into 5 waves. I believe now it's ending wave 4 with an ABC correction where the length of wave A placed the wave B high is where wave C ends. So above the 78.6% fib, I think Apple will go on a wave 5 that is the length of wave 3 placed at the wave 4 low, taking it up to 205 for wave 5. So that is Apple. Here's AMD, a little more aggressive of an idea. I think from the 2021 low in May, AMD forms a wave 1 and a wave 2. And I think now it's beginning wave 3. Wave 3 should be at least the length of wave 1 placed at the wave 2 low. But usually, wave 3 is a lot further. It's the 161.8% extension of wave 1, so it's larger than the length of wave 1 placed at the wave 2 low. But even if wave 3 is followed by a shallow wave 4 that retests the wave 1 high, if wave 5 is the length of wave 1 placed at the wave 4 low, then there's a lot of upside risk for AMD. Above 72, waves 1, 2, 3, 4, and 5 could ultimately take AMD into the mid 200s, even the 250s, for waves 1, 2, 3, 4, and 5. If this is wave 1 and wave 2, wave 3 should go beyond the wave 1 high of 164, even if there's a shallow wave 4 that retests the wave 1 high. If wave 5 is the length of wave 1 placed at the wave 4 low, that would give a wave 5 target in the 250s for AMD. So here's Nvidia. This is a wave 1 and a wave 2, a huge wave 3. I think this is a deep wave 4 at the 61.8 to 78.6% fib. I think there's a few other ways to count Nvidia. One of them would just be that this whole rally is a wave 1 and a wave 2, and now we're looking for what's going to be a lot further than what I'm about to say. But I think that the more conservative expectation is the more useful right now. I think this is a wave 1 and a wave 2 for Nvidia. And this is a wave 3 and a deep wave 4 at the 61.8 to 78.6% fib. I think 153, this wave 1 high, is a good level to be above. One of the Elliott wave principles is that wave 4 retests the wave 1 high. I think wave 5 will be the length of wave 3 placed at the wave 4 low, and that gives Nvidia a path to a new high up in the upper 300s for waves 1, 2, 3, 4, and 5. If we looked at what AMD kind of looks like, possibly a more aggressive view could play out in the future, but I think this is wave 1 and wave 2. This is wave 3. Wave 4 retests the wave 1 high, so wave 5 will be the length of wave 3 placed at the wave 4 low. Now gives the equal X target of about 387 for Nvidia. I think Qualcomm is a kind of similar idea, that this is a wave 1 and a wave 2, a wave 3 and a wave 4, and most importantly from this low, Qualcomm forms a wave 1 and a wave 2 at the 78.6% fib. The length of wave 1 placed the wave 2 low. Says Qualcomm will hold above 122, go on a wave 3 above 200 before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 to place the wave 4 low, then all in all, very similar to AMD, Qualcomm can be heading up to the 250s. Just like AMD can be heading up to the 250s, but AMD, it's above 72. For Qualcomm, it's above 122. I want to talk about SMH, the semiconductor ETF. It's kind of similar to QQQ, just a very similar idea that we're looking for potentially a rally for wave 5, and we need to figure out what that rally, how big it's going to be. I think from the 2018 low, just like QQQ, SMH forms a wave 1 and a wave 2, then has a big wave 3. And one interesting kind of tidbit about SMH's wave 3 is that it puts in the highest reading on the monthly RSI. So there's a rule in Elliott wave theory that says wave 5 must end with momentum divergence. I think the fact that SMH puts in a new high on the monthly RSI from an Elliott wave perspective gives a little bit of evidence that this isn't a massive wave 5 that ended. I think this is a wave 3 that ended, and this is an ABC correction ending wave 4 at the 38.2 to 50% fib. So the 50% fib of 207 would be a pretty tight level for semis. I think the 61.8% fib of 181 would be a little wider, but a little more meaningful. And wave 5, just like QQ, is either going to be the length of wave 1 placed at the wave 4 low, in which case it wouldn't make a new high, or it's going to be the length of wave 3 placed at the wave 4 low, which I suspect, and it's more of that kind of blow off top look where wave 5 replicates this rally from the 2020 low. We can see SMH go into the mid 400s. So here is Pfizer. We'll talk about some value stocks. Pfizer, I think, forms a wave 1 and a wave 2 from this low. There's probably a few ways to count it, but all I think that really matters is that from this low, this is a wave 1 and a wave 2 for Pfizer. They ended at the 61.8 to 78.6% fib. So this is wave 1 and wave 2. The length of wave 1 plays the wave 2 low. Says we're within a wave 3 that will conservatively take Pfizer above 66 before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 plays the wave 4 low, then all in all waves 1, 2, 3, 4, and 5 can take Pfizer up to 82. I think 45 is a tight level. 40 would be too wide because Pfizer has a low beta. But I think above 45, we can see Pfizer in the upper 60s and eventually even the lower 80s for waves 1, 2, 3, 4, and 5. It's almost identical to AstraZeneca. And this almost played out perfectly. I don't even really try to get it like this, and I know I'm not perfect all the time or anything like that, but this was pretty interesting. This is a wave 1 and a wave 2. I said from this low, we formed another wave 1 and another wave 2. So I was looking for the length of wave 1 placed the wave 2 low to give a wave 3 target, which is exactly where wave 3 ended. Then I was looking for a wave 4 that retested the wave 1 high, which looks like that happened. And now I think we've ended wave 4, and we're within wave 5 right now. Wave 5 will be at least the length of wave 1 placed at the wave 4 low. And I think we're going to see AstraZeneca go up to the 80s to complete this black wave 3 from this low. So I think AstraZeneca going up to the 80s, possibly Pfizer going up to the 80s in the big picture is kind of more bullish evidence. I talked about John Deere a little bit, but I didn't do it last week. How there's kind of a few value names in the first quarter. I think energy, there's probably 50 of them, but there's a lot of value names in the first quarter that went and made new highs and kind of outperformed SPY for a little bit. And then they kind of re-correlated with SPY during the more recent retest in April that we had. So I think John Deere is another kind of example of kind of like AstraZeneca, where it went out broke and made a new high for wave 1. And this is wave 2 at the 61.8 to 78.6% fib. We'll see John Deere extend into a wave 3 up to the 161.8% extension of wave 1, which is about 522 before a shallow wave 4 and a wave 5 higher. I think in both of those cases, nice evidence for bulls that the market probably wouldn't be crashing while we saw John Deere, AstraZeneca, and pretty soon Pfizer, in my opinion, rally. So here's a Disney. We form a 1, 2, 3, 4, 5 wave 1 on the all-time chart. Right? It's hard to think about all-time charts. This is the wave 1 that I believe took 30 years to complete. So remember, in Elliott wave theory, wave 1 is the measuring stick. It gives you the minimum wave 3 target, and it also gives you the wave 5 target, because wave 5 is either the length of wave 1 or the length of wave 3 placed at the wave 4 low in general. So I think this is a huge wave 1 and a wave 2 that ended for Disney. I think from this low, Disney's in the category of kind of like the DAX, the emerging markets, even Starbucks, even Nike, stocks that form a wave 1 and a wave 2 a wave 1 from the 2020 low, and now they're ending wave 2. And wave 3 will be at least the length of wave 1 placed at the wave 2 low before a shallow wave 4 and a wave 5 higher. So we're at the 78.6% fib. So that means the wave 1 low of 79 is the invalidation. I don't think it gets broken. I think this is wave 1 and wave 2. We'll see Disney go on up to a wave 3 that's at least the length of wave 1 placed at the wave 2 low. Now 223 is a conservative wave 3 target. If Disney really gets going, then I'm going to say that the wave 3 target is actually the 161.8% extension of wave 1, which is going to be larger than 223. But the point is, even beyond 223, if we have a shallow wave 4 that retests the wave 1 high, and wave 5 is the length of wave 1 placed at the wave 4 low, then all in all, waves 1, 2, 3, 4, and 5 can take Disney up to the 300s. And in my opinion, that's not going to be it. That's not going to be the forever top. I think that would be where a wave 3 ends on Disney's all-time chart. This is wave 1 and wave 2 above 79. Wave 3 can take this kind of stock that's often called a blue chip at all-time highs, and not ever at the 61.8 to 78.6% fib. But wave 3 could ultimately end almost 3 times its current price. In the long term, I think this black wave 3 on Disney's all-time chart would end at 315. So that's based on the length of wave 1 placed at the wave 2 low, giving a conservative wave 3 target of 223 before a shallow wave 4 that retests the wave 1 high, then wave 5 being the length of wave 1 placed at the wave 4 low. So that's the upside risk is 315. The downside risk is 79. And Nike, I think, is a very similar idea. I talk about Starbucks a lot. I wanted to talk about a different one. Nike in this video, how it's a 1, 2, 3, 4, 5 waves impulse, and now an ABC correction, ending at the 61.8% retracement. So it's yet another stock, just like the DAX, just like the emerging markets, just like Starbucks, just like, probably a few other names we'll go over in this video, that from the 2020 low forms a wave 1 and a wave 2 at the 61.8% fib. 85 is a little wide, but I think ultimately the wave 3 target will be the length of wave 1 placed at the wave 2 low. That will take Nike in the big picture up to 224. Before a shallow wave 4 and a wave 5 higher. No reason to go beyond those levels right now. FedEx, I want to talk about in the transportation sector. We're seeing some of these transportation names move a little bit. The options market is pretty interested in a lot of the transportation sector, including FedEx. I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 at the 50 to 61.8% fib. So I think we're going to see FedEx hold above 177, and it's going to have a pretty strong break above 319. I think the wave 3 target will be at least the length of wave 1 placed at the wave 2 low. And we're going to see FedEx in the transportation sector go up to the 428 area in the big picture above 177. So I'm excited to see FedEx break above 319. I think that's going to mean it's incomplete from an LA wave perspective, that whether this is wave 1 and wave 2 or whether this is wave A and wave B, the target for wave 3 or wave C is the length of this rally places this low. I think that's ultimately going to take FedEx up to 428 above 177. Very likely with a lot of names in the transportation sector. Our airline of the day is United Airlines. United Airlines forms a wave 1 and a wave 2. I'm hearing people say that their airline tickets are booming. That was what I was looking for. Maybe I should be an economist, but anyway, this is a wave 1 and a wave 2 for UAL. The length of wave 1 placed the wave 2 low can take United Airlines up to 76 before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 placed the wave 4 low, then all in all we can see UAL go to 109. More than double the current price. I think that above 30 is a little tight. Maybe this is more in the evidence category for JetBlue and American, but I just wanted to give United Airlines. I've covered basically every airline at this point, so thought why not do UAL. Here is uranium fuels. I want to talk about the energy sector because gas prices are exploding. Gas prices are actually out of control. I was one of the alarmists about gas prices, and I'm honestly, it kind of blew my expectations away that we could see, or what we have seen. I mean, just where I am, I mean, we're literally 25% in like the past 2 or 3 weeks or something crazy like that. On an annualized return, gas is just blowing all of us out of the water. Anyway, this is a wave 1 and a wave 2 for uranium fuels. So not necessarily natural gas, not necessarily crude oil, but in the energy sector, I think it's silly to think they won't all over time resolve in a similar area. I think this is a wave 1 and a wave 2 for UUU. I think this is another wave 1 and another wave 2 from this low above 4.32 the minimum wave 3 target for UUU is 12 before a shallow wave 4 and a wave 5 higher. Wave 4 retests the wave 1 high, and wave 5 is the length of wave 1 and places the wave 4 low. I think we could see UUU go up to 18 in the big picture. So that is obviously going to take some time. That's obviously not going to be easy. But above 4.32, I think that's ultimately where waves 1, 2, 3, 4, and 5 will take UUU. Now, the options market doesn't seem to think that some of these energy names have even really started. So Petrobras, very interesting about Petrobras' options market. If you go look at Petrobras' option chain, you'll see a pretty insane skew to the put side, where the puts are just way more expensive than the calls. And that's probably because investors in Petrobras are more worried about losing money than they are about making, fat returns. But anyway, huge skew on Petrobras' options. Anyway, I think this is a wave 1 and a wave 2 from the all-time chart, right? And so a lot of us, we just think, gas prices, like, they're going to go away. This is just a temporary thing. The chart of Petrobras and a lot of charts, they don't really support that message that, maybe it's not a good idea to chase oil stocks, but it's probably not a good idea to short them. And it's definitely not a good idea, in my opinion, to say, gas prices, this is a transitory thing. This is a temporary thing. I don't really need to worry about, this continuing. But I think Petrobras says it could. This is a wave 1 and a wave 2 on the all-time chart. We're very close. We're very close to seeing PBR go break this wave 1 high of 17.90. In my opinion, that will confirm that from this low, this is wave 1 and wave 2. The minimum kind of ideal wave 3 target is the 161.8% extension, which is about 27 before a shallow wave 4 and a wave 5 higher. So I think if we do see, where's the next relief point, for gas prices, if the blow off top or whatever in oil continues, I think it could be PBR getting to 27 before a shallow wave 4 and a wave of higher. But that would just be a short-term relief. PBR getting to 27 would be a short-term relief. I think there's, I talked about EM at the beginning of this video. Some of these foreign stocks, especially the ones that are very related to inflation, are looking incredibly good. So the reason that I'm grouping PBR and Vail back to back is because these, I believe, off the top of my head, are the 2 largest holdings of the EWZ Brazil ETF. And when I started this video off with saying that the emerging markets could do very well. The top holdings of the Brazil ETF are Petrobras and Vail. I think this is a wave 1 and an ABC wave 2 for yet another inflation-related mining company. And I think this is another wave 1 and another wave 2 for Vail. So all that really matters for Vail is from the March 2020 low, right? Another stock that's from the March 2020 low. This is a wave 1 and a wave 2 at the 61.8 to 78.6% fib. I think Vail holds 10 to 11 and goes on a wave 3. I think wave 3 will be all the way up at the 161.8% extension of wave 1. So we could see that some of the metal miners or some of the mining stocks in general do quite well. And that's obviously going to be not good for people with bills, not good for, people who have thought that what's going on with gas prices is bad. Because what could happen is that, now it's not just going to be gas prices. Now it's going to be everything. It's going to be, any kind of physical good could be, following what gas prices just did. I think Vail kind of supports that message. This is a wave 1 and a wave 2 from the March 2020 low, above 10 to 11. Vail can be going into the 30s. And in the big picture, it can be going up to, a new all-time high, right? And I can go all day with these mining stocks that have pretty scary charts in the big term and the big picture. I talked about FCX recently. It's up 7%. That doesn't really matter, but I think FCX is another similar idea. This is a wave 1 and a wave 2, and this is a wave 1 and a wave 2, wave 3 and wave 4. And then from this September 2021 low, FCX, Freeport McMoran, formed a wave 1 and a wave 2. It can be going up to 65 for wave 3 before a shallow wave 4 and a wave 5 higher. I'm not going to bore you guys with the mining stocks, but, I'm going to stop looking at the RSI. I'm going to start looking at gas prices because I swear I noticed that gas prices were going up and diverging while the market was pulling back recently. And I was kind of thinking, I was like, I wonder if that's a leading indicator that we're going to rally. Anyway, It probably wasn't. GDXJ forms a wave 1 and a wave 2 from this low that occurred in 2016. I think this is another wave 1 and another wave 2 at the 61.8% retracement. So above the 78.6% fib, I think GDXJ will hold above 29 and go to the median of this Andrews pitchfork that's found by taking the beginning of wave 1, connecting with the high of wave 1 and the low of wave 2. So I think ultimately we have kind of this pitchfork target, which is the median, which we can clearly see if GDXJ just went on a beeline right now, it would be at least into the 70s. From an Elliott wave perspective, I think that from this low, we form a wave 1 and a wave 2. So the length of wave 1 plays at the wave 2 low can take GDXJ up to 80 before shallow wave 4 and a wave higher. We don't really need to talk about beyond 80, or even really beyond the median of this pitchfork. But I do think the writing's on the wall that we're going to start to see now. It's not just going to be oil. It's going to be the mining stocks. It's going to be the soft commodities. It's going to be, maybe even the housing market, the lumber stocks. But I don't think it's just going to be energy that we're complaining about soon. And I don't think travel prices either are going to go down. But anyway, this is the value portion. We talk about the boring stocks. Let's talk about one more boring stock before we get into growth, Palladium. Now, this is a very interesting chart because Palladium has a lot of people are thinking there's going to be a recession, right? And that's kind of the popular thing, right? There's going to be a recession. It's stagflation. Now everyone's an economist. And I think it's very interesting that Palladium, I'm going to go out on a limb and say we won't have a recession. Okay? So I don't think we're going to have a recession. I think Palladium says we're going to do the opposite. We're going to have an economic boom. And that's coming from the ETF report from the Aberdeen Fund that runs this Palladium ETF. What it says in there, and the Palladium has a very positive, strong correlation with economic activity. If we go into a recession, then basically what the prospectus says for the Palladium ETF is we should see Palladium do very poorly if we go into a recession, because basically economic activity goes one way, Palladium goes the same direction. They're very positively correlated. So if we do have a recession, we should see Palladium get wrecked. I don't think Palladium's going to get wrecked. I think the opposite is going to happen. I think from this low, this is a 1, 2, 3, 4, 5 wave 1 and a wave 2. And from this low, this is another wave 1 and another wave 2 at the 78.6% fib. So 143 is a little wide. I think this is really important for the evidence category. I talk about, platinum a lot. Very similar idea. But I think Palladium from this low, wave 1, wave 2, I think this is kind of, it's kind of lining up with the Roaring 20s idea, where we have this economic kind of boom after a pandemic. Anyway, I'm not supposed to say the P word, but I think this is a wave 1 and a wave 2. This is another wave 1 and another wave 2. The length of wave 1 plays the wave 2 low and take Palladium in the big picture up to the 320s. Whether or not we're having a good economy or a bad economy, inflation will be pretty out of control if Palladium went from 190 to the 320s. Before a shallow wave 4, the retest of wave 1 high, and then wave 5 is the length of wave 1 placed at the wave 4 low. All in all, we can see Palladium go into the 400s in the big picture. It's currently in the 100s. So we can see Palladium go very up. And that, in my opinion, in the opinion of the Aberdeen prospectus, means that we could have economic activity really going up too. So the opposite of the recession most people think. Here is Tesla. Tesla formed a wave 1 and a wave 2. But all that matters for Tesla, I want to make this clear, all that matters for Tesla is from the March low, right? And it doesn't really, not too much point right now in debating the larger degree count. I think all that matters is the shorter degree count. Is that from this low, Tesla forms a wave 1 and an ABC wave 2 is at the 61.8 to 78.6% fib. So I think the fact, not the fact, right, from an Elliott wave perspective, that there's a lot of nice evidence for AMD, Qualcomm, and Enphase Energy and the kind of the semiconductor related names. I think Apple, that setup's looking pretty good. I think we're going to see, a nice rebound in tech, a nice rebound in the market in general. So obviously it'd be hard to see, if I think that AMD is going to the 200s in the big picture. Apple's going, to the 200s maybe in the more nearer term, that we would see Tesla, do bad during that time. So I think there's a lot of supporting evidence for Tesla, not just in the stocks I went over at the very beginning of this video with tech, but some of the videos we're going to go after, some of the stocks we're going to go over after. For Tesla, I think this is a wave 1 and a wave 2 at the 61.8 to 78.6% fib. So the length of wave 1 placed at the wave 2 low gives a wave 3 target of 1384 before a shallow wave 4 and a wave 5 higher. Now, if wave 4 retests the wave 1 high and wave 5 is the length of wave 1 placed at the wave 4 low, then we still have this idea that Tesla can go on this kind of crazy run to the 1900s, okay? So that's the upside risk. The downside risk is extremely clear. And as of the making of this video, it's a pretty good RR. Above 539, the upside risk is the 1900s. And then 539, that's the downside risk. So that's all, it's all risk reward. I think this is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low honestly says that 1384 is a minimum wave 3 target. There's a very real possibility that wave 3 goes up into maybe the 1600s before a shallow wave 4 that retests the wave 1 high. Then wave 5 would be the length of wave 1 placed at the wave 4 low. I think Enphase energy is great evidence for Tesla, but I think right now there's a great level to be above 539, and above 539, we could see Tesla go not only to an all-time high, but possibly to we could honestly see Tesla go up to 2,000, have another stock split again, and do it. It's just like a loop, right? It goes up to 2,000, has a stock split. It goes up to 2,000, has a stock split. It goes up to 2,000, has a stock split. It goes up to 2,000, has a stock split. It could be like, stock split inception. But I think from this low, this is a wave 1 and a wave 2. We'll see Tesla go up to the 1380s before a shallow wave 4 and a wave up higher. Now, I haven't looked at the bar chart straddle and strangle screener today. But what I do want to say, and this kind of is, maybe it's evidence, maybe it's not. Every time that I've seen Tesla all over the bar chart straddle and strangle screener, I can tell you exactly where they were right now. It was right here, and it was right here, and it was right here. So this is not a magic screener, but we can look at it together. I haven't looked at it today. It's a very intimate moment the first time I look at the bar chart straddle and strangle screener. And of course we see Tesla, duh. All right, it's always on it. But anyway, the options market objectively, we can say the options market is expecting Apple to have a big move away from the 150s. It's expecting Disney to have a huge move away from 110. Apple, again, it looks like Apple's all over this. But Tesla, Apple, Carnival Cruise Lines, Norwegian Cruise Lines, Nvidia, and Disney, we have kind of objective reconnaissance from the options market that these stocks aren't going to stay sideways, okay? If these stocks were going to stay sideways, we'd look for them on the short strangle and the short straddle screener where an option seller sells a call and a put. This is the long straddle screener where an option buyer buys a call and a put with the same strike, the same expiration, and they're just betting on a big directionless move. So anyway, we have objective evidence that Tesla is going to be having a monster move. So is Apple, so is Nvidia. And I can say for all three of those names, the move in the past has resolved resoundingly to the upside. Just wanted to throw that out there for, the data driven. But anyway, here's Enphase Energy. This is huge evidence for Tesla. Huge evidence for, I think, the market in general. Say 1, 2, 3, 4, 5, wave 1 and a wave 2 for Enphase. And then from this low, we form another wave 1 and another wave 2 at the 61.8 to 78.6% fib. I think Enphase holds 113. I think 108 is like the real wide stop. But I think Enphase holds 113. I think this is really the best short-term view I have of the market, to be honest. This is wave 1 and wave 2 from this low. We'll see Enphase go on a wave 3 up to the 161.8% extension, which is 287, before a shallow wave 4 and a wave 5 higher. So that would, be the more near-term route that takes a clean energy stock to an all-time high. I think First Solar is big supporting evidence, not just for Tesla, but just for growth in general, that this is a sector that's been accumulated for 10 years, right? It's easy to think that, all this price action is, based on what happens overnight. There's going to be some news story tomorrow, but from an Elliott Wave perspective, kind of from a Wyckoff perspective, I think even from a classical trading perspective, this is 10 years of something, right? It's either 10 years of distribution possibility, or it's 10 years of accumulation. And the Elliott wave theory really lines up and suggests this is 10 years of accumulation for First Solar. Wave 1 and wave 2, another wave 1 and another wave 2, and yes, another wave 1 and another wave 2. Now, when this wave 1 broke both of these wave 1 highs, it kind of confirmed that we're within wave 3 of wave 3 in the big picture. So that's where I expect this wave 3 to end. In the big picture is up in the 200s. From this low, this is wave 1 and wave 2. This is another wave 1 and a wave 2 that's ended at the 61.8% fib, above the 78.6% fib, which is a little wide of 48.73. I think this is wave 1 and wave 2. We're going to go on a wave 3 up to the 161.8% extension, which is 181, before a shallow wave 4 and a wave of higher. If wave 5 is the length of wave 1, place the wave 4 low. All in all, we could see FSLR head up to the 216 area in the long term. Here's NEO, finally getting a little bit of, dare I say, alpha from the Chinese stocks. I think this is a wave 1 and a wave 2. Okay, one day isn't a trend, I know that, but this is a wave 1 and an ABC wave 2 for NEO at the 78.6% fib. So there's no low to trade NEO against. That's probably, the only issue. I can say objectively, I think that the options market is using straddles on NEO and a lot of these clean energy stocks to manage the downside risk, and so am I. I'm using straddles on ICLN to manage a lot of the downside risk in growth and just the market in general. I'm still holding those. So I talked about the straddles that I'm using to manage downside risk in a video, I think 3 or 4 videos back. But one of them was on ICLN to manage the downside risk and growth. So that's what I'm doing for clean energy. And I think that's what the institutions are doing. We've seen a lot of clean energy stocks on the long straddle and the long strangle screener. For NEO, I think this is a wave 1 and an ABC wave 2 at the 78.6% fib. This low of 11.67 would be pretty tight for the high beta, but I think this is wave 1 and wave 2, and we're going to see NEO begin a wave 3 beyond 66 for an all-time high. Wave 3 should be at least the length of wave 1 and place at the wave 2 low. That would give a minimum wave 3 target of 77. Now, I know it sounds ridiculous talking about NEO going up 400, 500%, but that's kind of how it works. They do the really kind of crazy rallies and they have the devastating corrections, and then it looks like we're setting up for another one of those breathtaking rallies. I think this is wave 1 and wave 2, so the minimum wave 3 target is 77. I think 11 would be pretty tight. Realistically, I'm managing downside and clean energy with the straddles on ICLN, but I do think we're going to see NEO begin a wave 3 beyond all-time highs into the 70s before a shallow wave 4 and a wave 5 higher. Just for fun, if wave 4 retests the wave 1 high and wave 5 is the length of wave 1, places the wave 4 low, then NEO can be a three-digit stock in the long term. I think so can possibly this one, Li Auto, in the Chinese EV sector. I think this is wave 1 and wave 2. I think this is another wave 1 and an ABC wave 2 at the 78.6% fib for Li Auto. Li Auto never broke below 15 or this IPO low of 14.31. I think this is a wave 1 and a wave 2. We'll see Li go up on a wave 3, and if it does get past the wave 1 high of 37, then the wave 3 target is the 161.8% extension, which is 50, before a shallow wave 4 and a wave 5 higher. So that would confirm that this is a huge base, from the IPO. And it's kind of similar to the idea that First Solar has been forming a huge base in a more long-term idea, but I think there's multiple stocks in the clean energy sector that kind of have these big accumulation patterns where we could see a pretty explosive move. I think Li is one of them from the IPO. This is wave 1 and wave 2. I think this is another wave 1 and another wave 2. Li can head up to the 161.8% extension, which is 50 for wave 3. I talked about NetEase and the Hong Seng in my last video. I was talking about Datadog, Amazon, and Shopify. Right now, I think this is a 1, 2, 3, 4, 5 wave 1 for Datadog and a wave 2. I think from this low, this is another wave 1 and another wave 2 for Datadog. And this is an ABC correction that's ending wave 2 at the 78.6% fib, where the length of wave A places the wave B high is where wave C ends. So I'm expecting a wave 3 to be at least the length of wave 1, places the wave 2 low. That could take Datadog up to 217. Now, if we're above 69 and Datadog goes and breaks above 199, then wave 3 is usually bigger than the length of wave 1 places the wave 2 low, because wave 3 is usually the 161% extension of wave 1. It's followed by a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high, and wave 5 is the length of wave 1 places the wave 4 low, then we can see Datadog go pretty damn high, all the way up to the upper 200s, the 300s even in the big picture. So the downside risk is 69. If wave 3 is the length of wave 1 places the wave 2 low, then the next target is 217 before a shallow wave 4 and a wave 5 higher. So I think this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. And this kind of recent IPO software name can be beginning wave 3 of wave 3. And that's obviously, it's not just going to be Datadog, right? If Datadog goes to 200, there's going to be a whole host of other software stocks, growth stocks, and kind of that beaten down Cathie Wood sector that could get, a lot of money flown into it during that time too. Here's Amazon. I think from the 2018 low, Amazon forms a 1, 2, 3, 4, 5, a wave 1, and an ABC wave 2 at the 61.8 to 78.6% fib. Above the 78.6% fib of 1,834, I think Amazon can begin a wave 3. There's at least the length of wave 1 placed at the wave 2 low. That can take Amazon up to 4,490 before a shallow wave 4 and a wave 5 higher. So I think one interesting kind of connection with Amazon is that we have another kind of FANG member that has a similar collapse and I believe a similarly explosive setup from this 2018 low where Facebook forms a wave 1 and a wave 2. I talked about in one of my posts how it could be a 1, 2, 3, 4, 5 wave 1, and then this is wave 2, or a little more simply with a tighter stop that we form a wave 1 and a wave 2 from the 2018 low, and then this is another wave 1 and another wave 2 from the 2020 low. In that case, if Facebook is above 137, which is pretty wide right now, then the length of wave 1 places the wave 2 low can take Facebook up to 419 before a shallow wave 4 and a wave 5 higher. But I think Facebook and Amazon are a pretty similar idea in the FANG sector where they have this big beatdown. I think both of them are ending wave 2 and could begin essentially what replicates the entire rally from the 2018 low to the 2021 high for both stocks. So that's Facebook and Amazon. More in the eCash sector, here is Shopify and PayPal. Now for Shopify and PayPal, there aren't really lows to trade against for either of these names, but they're at the 78.6% fib. I can tell you what some wave theorists will say. What some wave theorists will say when you lose a low is wait for wave 1 to form, and then buy the wave 2 against that low to ride waves 3, 4, and 5 to the upside. Now for me, I like to kind of acknowledge that for a growth stock with a high beta, a cryptocurrency with a high beta, any stock that is very volatile, that kind of corrections are part of the game. So I'll usually manage that downside risk with the initial position size and scaling into a sector over time, or I'll use option straddles to get direct exposure to the downside. But I do think that Shopify and PayPal at the 78.6% fib can put in huge wave 2 lows. And I really mean kind of huge wave 2 lows, because from the 2016 low, I suspect this is wave 1 and wave 2. So for Shopify and for PayPal, I'm looking for a wave 3. That is at least the length of this entire rally in the big picture. So it's not going to happen tomorrow, but I think ultimately we'll see Shopify at new all-time highs for wave 3 in the 2000s before a shallow wave 4 that retests the wave 1 high, and then a wave 5 that is at least the length of wave 1 places the wave 4 low. So in the big picture, there's a lot more upside past 1,762. Okay, the downside, there's not a clear low to trade against for Shopify or PayPal, but I think that both of them are ending huge wave 2 lows. What some will say is that you wait for the wave 1 and then buy the wave 2. I think that a lot of times, if you try to trade a stock like that, you're just going to get out or you just chop to death. But I think this is a huge wave 1 and a wave 2 for PayPal and for Shopify, and that both of them can begin wave threes beyond this wave one high. I think that there's kind of a holistic view of growth right now, from First Solar to Snapchat and a lot of stocks in between, where whether it's the clean energy sector, whether it's the social media sector, we're seeing a lot of these big wave two lows being put in. Twitter, I think, is another one in kind of the social media related name. I haven't looked at this chart recently, but I think this is a wave one and a wave two. I kind of looked like an idiot recently. I thought that Twitter had been halted for some reason, but I think Twitter forms a 1, 2, 3, 4, 5 wave one and an ABC wave two, just like a lot of the growth stocks that we just went over. And now it can begin a massive wave three that is at least the length of wave one, places the wave two low, and that could take Twitter up to 92 before a shallow wave four and a wave up higher. If wave four retest, we don't need to do that. All right, but Twitter can go to the 90s. And I think from this low, I'll do a little improv here. I think from this low, this is wave one and wave two. So a little tighter. I honestly don't think, gun to my head, I don't think Twitter goes below 31. This is wave one and wave two. It begins wave three of wave three right here. And I know we have special circumstances with Twitter, but it's in the SOCL ETF, I believe. If Twitter's rallying, if Snapchat's rallying, if Facebook's rallying, all the social media stocks are going to rally together. All the growth stocks are going to rally together. So I think Twitter is in that evidence category with Snapchat and Facebook. Here's Bitcoin. Now with Bitcoin, I should probably say right off the bat that a lot of my Bitcoin analysis is based on altcoins. And I think even, recently we've seen a lot of correlation between Bitcoin and the market, kind of Bitcoin and even growth. The idea that Cathie Wood owns Tesla and Bitcoin, or she changes that stuff every day, but there is a little bit of correlation between Bitcoin and the market. So I think if there is this idea that, we could see Tesla and AMD and then Apple and Nvidia have these nice rallies, that we wouldn't see Bitcoin crash during that time, most likely. Now, we'll also go over what the bears think about Bitcoin, but we'll get into what I think about Bitcoin right now. I think this is a 1, 2, 3, 4, 5, a huge wave one for Bitcoin. And one of the reasons I know, or I think I know, this is the wave one is because I predicted this massive rally before it occurred. This huge rally broke to new all-time highs and went way past my target, which was 22,000. The point is, I think this is a clear impulsive structure. This is 1, 2, 3, 4, 5 waves. I think this is all a massive wave one. So we have to figure out, where does wave two end? Well, a good place for wave two to end is the 61.8% retracement. It's important to talk about what the bears think about Bitcoin, and then I'll go over the altcoins and talk about why I'm not betting on this, why I don't think anyone who does bet on this is going to do well. But what the bears think about Bitcoin and what they think about a couple of these cryptos is that this is a B, C correction. So that's wave A. This is wave B. The bears are looking for a wave C. That is the length of wave A, places the wave B high. So they're looking for Bitcoin to go to about 12K. Maybe the 78.6% fib of 17K is where a lot of bears are looking for this ABC correction to play out. All right. Now, is it worth noting that even if Bitcoin got below 20K, we'd still be looking for that to end a massive wave two before a wave three that replicates this entire rally? I think it's worth noting. Okay. So even if Bitcoin got down to 17K, I would be looking for that to end a massive wave two before a wave three that is at least the length of wave one placed at the wave two low. The minimum wave three target would be 80,000 in the big picture before a shallow wave four, the retest the wave one high. Then wave five would be the length of wave one placed at the wave four low. And we're still looking at, in the big picture, Bitcoin going to the 130K range. Okay, now that's that's not really the scenic route to new all-time highs. And that's not really the route that I favor. And I'll talk about why when we look at some of these cryptocurrencies. But I do think the 78.6% fib of 17K is the only really useful level for Bitcoin right now. So we'll talk about where I'm getting a lot of my analysis from and my other levels from the altcoins. But I do believe this is wave one and wave two. I think Bitcoin ends wave 2 between the 61.8 and 78.6% fib and goes on a wave 3 that is at least the length of wave 1 placed at the wave 2 low. And I think we're going to see Bitcoin still go up to the 90,000 range before a shallow wave 4 and a wave 5 higher. Even if wave 4 retests the wave 1 high, if wave 5 is the length of wave 1 placed at the wave 4 low, I still think Bitcoin goes up to the 130 to 110K range ultimately. Now, we'll talk about some good evidence for not betting against Bitcoin. Two of them are altcoins. So I'll talk about Tron and Ripple. There's a whole lot of altcoins that really say, don't really bet against crypto. I think Tron is kind of one of the more obscure ones, but this is a wave 1 and a wave 2 at the 78.6% fib. We make a new high on the weekly RSI for this wave 1 high, which supports the idea that this isn't a massive wave 5 that ended. I think this is wave 1 and wave 2 for Tron. And I think from this low, this is another wave 1 and another wave 2. We'll see Tron begin wave 3 of wave 3 to all-time highs, right? So Tron's at the 78.6% fib. It can go to, more than double its current price for wave 3, just, to put it plainly, right? And it's not just Tron. Solana, Sol USD, is a very similar idea where it's at the 78.6 to 61.8% retracement of a pretty important rally. I think right now it's at exactly the 78.6% fib. So there's not a great level to trade Solana against, but it's at the 78.6% fib. And I think this is where we could see Solana in wave 2 begin a wave 3 that is at least the length of wave 1 placed at the wave 2 low. And that could take Solana up to 300 before a shallow wave 4, the retest the wave 1 high. And if wave 5 is the length of wave 1 placed at the wave 4 low, then ultimately Solana can have a 0 added to its current price. So for Solana, there's really not a level to trade against. It's at the 78.6% fib. Tron's at the 78.6% fib. And what I'm trying to show is that there's a whole lot of altcoins that have these pretty explosive setups, right? These, kind of setups where zeros start getting added to the price. One of them is Ripple. I think this is a wave 1 and a wave 2 for Ripple in the big picture. And I think from this low, this is another wave 1 and another wave 2 at the 78.6% fib. We can see Ripple go up to 3 before a shallow wave 4 and a wave 5 higher. So for Ripple, again, there's not a great level to trade against. 17 cents is just, quite frankly, too wide. It's less than half the value. Solana's at the 78.6% fib, and they make these difficult because I think Solana is ultimately going to get a 0 added to its current price. Ripple might get 1 or 2 zeros added to its current price, but I think this is a wave 1 and a wave 2. Ripple's going to go up to the 161.8% extension of 3 for a wave 3 target before a shallow wave 4 and a wave 5 higher. There's a whole lot of altcoins that say this could be a scam wick where we're breaking this low, right? We're seeing Bitcoin below 30K. Everyone's getting out. For me, I kind of embrace the volatility that's just going to come with these kind of very high beta, high risk, high reward setups in crypto. If we look at Ethereum, I think this is a 1, 2, 3, 4, 5 wave 1 and a wave 2. And Ethereum is at the 61.8% fib. So I don't think Ethereum broke below this low. It came within $11, okay? For all intents and purposes, it might as well have them. But we're at the 61.8% fib. For Ethereum, we're at the 61.8% fib. For Bitcoin, we're at the 78.6% fib. For Tron and for Solana. And there's a whole lot more in the altcoin sector. So I think we're getting pretty explosive setups across the crypto market. I think that Ethereum is at the 61.8% retracement, and it can begin a wave 3 past 4,865 before a shallow wave 4 and a wave 5 higher.